Welcome to another edition of Your Daily Five. Super special guest host today, Professor Bruce Fraser. Professor, how are you?
Johnny Scan, I'm great. Thank you for having me.
Absolutely. Well, we can't do this one without you. It's a biggie. We're going to look at the S&P 500 with the Bollinger Volatility View and special timely note on working with Bollinger Bands. John Bollinger will be a guest at the TSAASF conference coming up this week. What are your thoughts there, Professor?
Gosh, come to the conference. It's in San Francisco at legendary Golden Gate University, and just meet all these fine people. They're going to have great presentations. I'm going to do a little swing trading workshop early in the day before the actual conference starts. So if you're there, please come up and say hi. And the
It's a hybrid
speakers,
conference, too.
yeah. And so for people that can't get to San Francisco for this, it's going to be streaming, virtual conference. All that's required to attend is to become a member of the TSAA. Very simple thing to do, and you get great content throughout the entire year. It's a great organization. Come be a member and attend the conference virtually.
Absolutely. And just a note on cost, $75 to be a member, $75 for the conference attendance itself. That's the best 150 you're going to spend all year, wouldn't you say, Professor?
Absolutely. And that's if you attend live. If you attend the virtual conference as a member, you can watch it live, and you can also watch the recording later on. You'll have access to that. So, and access to content throughout the whole year.
That's fantastic. Let's take a look at what we're going to talk about today, and that is using the Bollinger Band width as a measure of volatility. So we have on StockCharts a really great section on the Bollinger Bands themselves. Volatility bands based on standard deviation moving around a 20-period moving average. The shaded area here shows within the bands, and one of the measures that's available for that is the band width. How far apart are the upper and lower bands? Certainly in a more volatile context, the bands are further apart. Narrowing bands indicate less volatility. Volatility is a real important measure of perhaps institutional sponsorship. Your thoughts, Professor?
Absolutely true. One of the main, really core components of the Wyckoff method is that very wide volatility is indicative of a stock that is not being sponsored by institutions, by large informed interests. As the volatility comes out of a stock, as it goes through accumulation and into an uptrend, the narrowing volatility is a measure of the stock being absorbed, being in strong hands, and being in a position where it can move into an uptrend easily and steadily. So a very important concept.
Let's take a look at what we can do with just the rank command. We've done a YD5 looking at only using the rank command, and we're going to do that again here because we have some really volatile, troubling times today. Of course, CPI numbers came out, and there was a very significant reaction in the market. Significant reactions tend to widen bands. So if we take the S&P 500 as our universe of scanning potential, and we rank each and every stock in the S&P 500 by the width of the bands, and we take the ascending rank sort, we're going to get the smallest bandwidth first. Smallest bandwidth translate to lower volatility. Let's take a look at what that does for us when we run that scan. Of course, we have our 500 candidates, and our sort order shows us that we have 1.62 down to 5.48, and then all the way through the whole 500 they increase all the way down. So we have increasing bandwidth volatility as we go down the list. CandleGlance gives us a quick overview on the stocks that we have, maybe 10, 12 at a time. We can also add the Bollinger Bandwidth as an indicator, and you see in all these instances, the Bollinger Bandwidth is at the lower end of the graph. Your thoughts, Professor?
This is such a cool view, and you can see 6 months of data and the volatility rising and falling with the bandwidth indicator. What a great visualization of what's going on in these stocks. And of course here, because of the ascending nature, these are all very low volatility stocks at this time.
Here is the other end of the list, and we always have to remember, list is beginning, middle, and end, and we should be prepared to consult all parts of the list. This is the other end. Look what we have here. Big bandwidth all the way up at the top of that graphic at the bottom, and we can see big moves, many to the downside, that are producing that bandwidth expansion. Different picture here, wouldn't you say, Professor?
Yeah, I would just say this, that note the big crashing down in most cases of prices and how the price is falling very dramatically and the volatility is spiking up, which tells you that the stock is not in strong hands. That is not a characteristic of a stock is going into strong hands over time. So tells a story. Very
Absolutely.
good. Very interesting.
So here we have one of the top ones on the list, not the top two. That was Citrix and Nielsen. They both have some M&A action there that's creating a little bit of price distortion and therefore band contraction. But here we have big company in the defense area, been a sort of a perennial stalwart area for dividend investors, conservative investors. And look what we have here. Even on this very intense day, look at the width of those bands for Northrup. What does that tell you, Professor?
Well, the stock is continuing to squeeze volatility out. Call this potentially a reaccumulation going back to March of this year. And each one of these pullbacks has been really more muted. And so there could be the characteristics of accumulation here. I think that it's very important in this very tight range that it's in with a narrow Bollinger Band, that it can stabilize very quickly in this area between 460 and where it is now, and then be able to turn up and get out of this resistance zone, which has really been in force since March.
How interesting that we had an upper band tag initiating a climactic condition that has kicked off this whole range since March. Very white coffee in there, isn't it?
Yeah, that's a really good point. And big climactic surge, automatic reaction, range bound ever since. Really good point, John.
That's going to be hopefully our topic on an upcoming power charting, is how do we merge the benefits of Wyckoff and Bollinger in the same chart. That'll be interesting, wouldn't you say?
Yeah, I can't wait for that.
All right. Here we have Southern Company, Conventional Electricity. Now this one has jumped around quite a bit, very severe sell-off in June, but look at how it tagged the lower band, popped back up, area of low volatility initiating a move to higher pricing there, and we're once again in an area of band contraction. In this immense volatility that we have today, look at how tight those bands are. What does that tell you, Professor?
Well, what I really like about this chart is actually the relative strength, which if you go back to late 2021, the relative strength is up, and the moving average, which is that window below the volume. And so even in that sharp break in June, the relative strength maintained its position above the long-term moving average. The thing I'd be concerned about here is it's tagging the top of the Bollinger Band, narrow range, very dull and quiet. Utilities have been very strong. I would want to see the correction here be real dull, quiet, low volume, and then be able to just keep in its upward trend of relative strength and price. But I like the way this looks. It's a little bit of a tricky place right here, just as was the case at the end of January of 2022. You can see a similar setup there also.
And look at how the Bollinger move confirms for us positive cross in the OBV, dull and quiet action here, consistent uptrend on the relative strength. And look at this nice MACD cross here, leading us to go above the zero line to consistently positive movement up for a considerable period of time. A lot can be seen on charts, and all of these give us bases to analyze the chart, but more importantly, create scan opportunities. Here's our next in line. That's Johnson & Johnson. Now, this has been in a bit of a downtrend lately, and we do have a narrowing band. We're staying inside the lower band on a bigger drop today. Still some work to do here. Well, the strength pointing down a bit. What are your thoughts, Professor?
Well, this is really an encouraging look, I think, because the relative strength has been trying to walk uphill since mid-August. And you can see late August, the low, a little bit of a climactic decline, sharp rally. Now it's testing that late August low, and a successful test down here tagging the lower Bollinger with the relative strength trying to get better could indicate that Johnson & Johnson might be trying to start some kind of at least a swing trading uptrend. So one to watch closely here.
All righty. Let's go to the other end of the list and see what we have on the wideband candidates. And here we have HPQ, computer hardware. Certainly that's been a tough area of late. Desktop sales way down. And we see relative strength down, MACD down, and a negative cross on the longer term OBV lines. Almost looks like we came through a period of distribution and have broken through the ice. Your thoughts, Professor?
That's the way I would interpret it. And so, yes, you can see a big distribution June of this year back to December of last. And then this looks like an attempt to rally July to August underneath old resistance or old support, which is on new resistance. Failed there and has sold off really very sharply since that time. So this is a stock that looks troubling. Volume is somewhat high on this decline, and the widening Bollinger Band is really a good warning that the stock is not in strong hands right here. Always.
NVIDIA, a favorite, a darling of the Momo and growth crowd. Look at it now. Scouring the bottom yet again. Not even cheap at that. What are your thoughts here, Professor?
Yeah, I actually was attempting to swing trade this chart, and successfully in the summer, and it worked out okay, but you can see that it rallied right up to the early June resistance level. Then it started to break. This is in August, rallied again, rally of poor quality, diminishing volume, and now it's just really falling off. Note here, this is classic characteristics under the ice. In September, there was an attempt to rally, but a very flat consolidation, and now today pretty weak, down 7%. And this looks to me like the characteristics of ice. So I'd be very careful with a stock like NVIDIA.
Outstanding. That's all the time we have for today. Thank you so much for joining us. Professor, great to have you.
Thank you so much.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.